Just a summary of what GDP is. Again, it's consumption plus investment by businesses plus government spending plus net exports. So here's the kind of economy circular flow, and I'm going to do this in terms of the flow of money. Because that's the purchases of goods and services in currency, dollars or another currency, is what GDP is all about. So the green is the flow of money for purchasing of end products, and that's or output, and that is what is GDP. There's going to be a lot of other things going on here, but the green arrows and the green flows are the ones that are GDP. The orange is the actual flow of the produced goods and services like cars and soap and things like that. So fundamentally, we have households and businesses, people and businesses producing things. And people in households like you and me, we buy things. That's the purchase of goods and services. So fundamentally, that's consumption, and that's pretty easy to understand, I think. And then, of course, when we buy those things, we get the things that we buy. But that's we're counting the value of the things we purchased. The yellow is the income that we get and the taxes the government gets, which I'll talk about, which isn't counted until we spend it. So it's for households, we get income by working for businesses, but that's not counted as GDP until we spend it on things. And now the blue will be the labor the households contribute. So we contribute labor or work to businesses, and then we get paid for that. But it's counted as GDP when we buy things, when we buy the output of those businesses. So that's why our income is not counted as GDP, but rather what we do with it when we buy things. Now, the pink is the financial sector, and the pink makes the point that households or us, we don't spend everything that we earn. We save some of it, and that usually goes into the financial sector. And then businesses borrow money to spend it. And it's counted, this borrowing by businesses isn't counted as part of GDP until they spend it on investment to build new factories and things like that. But that's where they get it from, because usually they're earning revenue, of course, by selling things. They earn revenue from the consumption, but usually their expenses to operate consume most of that revenue. So they borrow money, and that's investment by businesses. Then we have to add in the government, which takes in money from taxes from both households and businesses. But again, at this point, the government hasn't spent anything yet, hasn't purchased any goods or services. But when it does, so it buys tanks for defense, for example, it buys that from a company that makes tanks. That's a government purchase of goods and services. So that is also part of GDP. Then we have to look at the rest of the world, because people in other countries buy things that we produce. They buy things produced by businesses here, and then they get those things. But the value of what they buy, that's called exports. That's the export value. But then, of course, we are not buying things only that were produced only in this country. We're sometimes buying things that were produced somewhere else. So we get those things and we buy them, but that's money that we're spending that has to be removed from this equation, because we didn't spend it on stuff produced in this country by these businesses. We spend it on things produced in other countries. So we have to remove that. That's called the import value. So that's a very kind of try to be a way to explain the flow of things and what's important in understanding in GDP and what the components are. So again, C, that's consumption by households buying things produced by businesses and sometimes produced elsewhere that has to be removed. Investment by businesses. So they borrow money, but it's only counted as GDP when they actually spend it on new factories and machines and things like that. Government purchases of goods and services. They take in taxes from businesses and households, but that doesn't count as GDP until they actually purchase goods and services from businesses. And that's G. And then we have net exports. That's the export value, because that's more things that we're buying from elsewhere. And of course, that arrow could also be pointing to households. Um, and or I'm sorry, forget that comment. That arrow is correctly pointing to businesses. And then we have to take away uh, imports because we're looking at this holistically in terms of the total system, what is what's being produced in this country. So uh, exports are things produced in this country that are bought elsewhere. Imports are things that we buy that we have to remove because they were produced somewhere else. And then so the total is GDP. So I hope that was helpful. A bit of a crazy chart, but walking through it maybe makes it much clearer. And that's it for this slide.